Hey, it's Peter, your go-to guy in real estate investments, passive income, life tips, artificial intelligence, and travel. Welcome back to the channel where we explore a diverse range of topics to help you thrive in both business and life. In today's video, we are talking about commercial real estate terminologies. Commercial real estate investing is like a grand game of chess. Each move, each decision, is based on a complex set of rules and terms. Mastering these terms is the first step to becoming a savvy player in the commercial real estate market. Understanding key terms in commercial real estate, CRE, is crucial for making informed investment decisions. This video will guide you through essential terminologies every CRE investor should know. Commercial real estate, the segment of real estate that is used exclusively for business purposes. It includes properties such as office buildings, shopping centers, and hotels. Net operating income, NOI, a fundamental metric used to evaluate a property's profitability, calculated by subtracting operating expenses from the gross income. Cap rate, a rate that helps in estimating the return on investment for a property, derived by dividing the NOI by the property's current market value. Cash-on-cash return. This metric calculates the cash income earned on the cash invested in a property, providing insight into the investment's yield. Occupancy rate, the ratio of rented or used space compared to the total amount of available space, indicating a property's earning potential. Loan-to-value, LTV ratio, a crucial figure in financing CRE deals, representing the ratio of the loan amount to the value of the property. Due diligence, the comprehensive process of evaluating a property's details before finalizing a purchase, ensuring the investment's security. Lease types, different arrangements such as triple net, NNN, and gross leases affect an investor's responsibilities and income. Amortization, the process of spreading out a loan into a series of fixed payments over time, affecting equity buildup and interest payments. A 1031 exchange, a tax strategy allowing investors to defer capital gains taxes on property sales by reinvesting the proceeds into a new property. Mastering these CRE terms is vital for successful real estate investing. Continue expanding your knowledge to make strategic investment decisions. Once again, this is Peter. Don't forget to like and subscribe to the channel if you like this video, and reach out to me if you have any questions.